Hi everyone, welcome to the last update for 2021. With today's video, we would like to introduce briefly our 2022 outlook and discuss some of the main positions that we have in the book going into next year. First, briefly, just a description of the performance that we had in December 2021. The fund was down around 1%. There were no specific news on the positions in our book. We think our portfolio suffered from some year-end liquidation into more illiquid assets, while hedges, more liquid indexes that we use to hedge our book actually rallied substantially, especially after the FOMC meeting. So we lost some money on puts and shorts and future hedges. And our longs underperformed, so resulting in around 1% loss. Going into next year, we expect a strong monetary policy tightening cycle from developed market central banks. Both the Fed and the ECB are starting to acknowledge that inflation is going to be more persistent and higher for longer. And just looking at US with the unemployment below 4% and salary inflation above around 5%, clearly signals that the Fed is vastly behind the curve. So we expect a strong and aggressive policy shift and the policy tightening, which will potentially include clearly an accelerated tapering of asset purchases, but also potentially the beginning of not only a rate hiking cycle, but also balance sheet reduction in US. To play this theme, we are short a portfolio of government bonds of developed markets, mainly Europe and US, and we are also short a couple of emerging markets that we think potentially can suffer from an aggressive tightening of monetary policy from the Federal Reserve, in particular Turkey, where we think the policy stance will not change ahead of 2023 election. So we expect further elevated inflation and currency instability. And China, where policy is actually going on the other direction. China is clearly suffering from some structural issues. The real estate market will probably continue to have a strong impact on the economy for the foreseeable future. Real estate is around 70% of Chinese savings and 30% of China GDP. So we expect policy support and policy easing. So we are short the yuan versus the dollar, but we are also short China CDS as a proxy for credit risk stemming from the real estate sector, which is very big compared to the economy. This was as far as the macro side is concerned. On the micro side, we just wanted to discuss briefly 10 of our positions, of the position that we have in the book. Just the one that we think where we have highest conviction in the next couple of months. The first one is Dish convertible bonds. We think the equity is trading. Dish equity is trading at 30% discount compared to the value implied by the TV business plus the spectrum value. So the market is giving zero probability, actually zero probability to Dish becoming a successful fourth telecom operator in US. So we think there is a great upside to the equity and the convertible bonds, and we remain long, and we actually started to add at this depressed level. Second, we are long European banks via calls on the equity on the equity index. But also via lower tier 2 bonds of Monte dei Paschi di Siena. We think as far as Monte is concerned, we think the European Commission will grant an extension to the privatization deadline. The bank in the meantime is creating capital organically, and demand for banks equity in an inflationary environment will be strong. So we think the execution risk execution risk of a capital increase priced into the bonds is probably too high. Third, we are long a basket of lithium stocks. We have a barbell. We are long on one side the 3-4 biggest biggest and lowest cost producers, and on the other side we are long some startup projects in US. The lithium, if we have to believe revenue estimates that analyst has on Tesla and other electric vehicles companies, then the lithium market will remain and actually will remain in deficit, and the deficit will increase in the next 5 to 10 years. So lithium price we think will keep going up to justify the additional supply. So we are very, very bullish on the lithium theme. 4, we are long the fourth commission. We are long a basket of electricity storage companies. We think storage is the current bottleneck for further renewable energy expansion, wind and solar. Specifically, we are long convertible bonds of STEM and the equity of Corre Energy and Fluence. 5, we are long a distressed bonds of a supplier in the aerospace sector to play the strong recovery in demand that Airbus and Boeing are forecasting in the next 3 to 5 years. 6, we are long Hovnanian bonds and stocks. Hovnanian is a US home builders, which is trading at 3 times price on earnings, and bonds are trading at 8 to 9%. And the market is concerned about policy tightening, of course, by the Federal Reserve. However, the US house inventory is at the lowest level in the last 25 years. So it's a very, very, very different picture compared to 2006. And we are actually constructive on the sector and playing the theme via the cheapest and most levered company that we identified. 7, we are long Airspan, which is potentially a key beneficiary of we are long Airspan stock, which is potentially a key beneficiary from the 5G telecom capex, with a massive business opportunity in the next 3 years, and the stock is only trading at 1 times the revenue. It's cheap because it suffered from strong liquidation in the last quarter, given that it was an ex-SPAC. SPAC has been sold aggressively in the last 3 months. That's why the stock is so cheap, and that's why we are very, very bullish. 8, we are long convertible bonds of Stride. Stride is an edutech company operating in US. The stock is trading at very depressed multiple, as the market is concerned about the post-COVID effect. However, we are very constructive on edutech demand. We think is more structural. Yes, COVID gave a big boost, but we think it's going to continue and is more structural. And the stock upside is potentially in the triple digit. So we are long a small position on the stock, but we are also long a more substantial position in the convertible bonds. 9, we are long bonds of Oi Brazil, which is a telecom operator in Brazil. The bonds are trading at 86 for a 15% yield. Oi Brazil is clearly a very levered company, still loss-making, but we expect the sale of the mobile business and the sale of a stake in the InfraCo to be approved sometimes in the first half of 2022, and that will lead to a very substantial reduction in leverage and in the credit risk, and will lead to a very strong re-rating of the bonds. Last, we have a relative value in the electric vehicle space, where we are long a few startups where we think have a very interesting technology, and where product interest is very strong, that are trading at 90% discount versus the biggest players. Specifically, we are long convertible bonds of Arrival and Fisker, and we have a long position on stocks of Canoo and Hyzon, versus short on the stock of Tesla, Rivian, and Lucid. And we think this trade has a potential strong upside given the massive valuation gap and market cap gap that this company have. And that's all. We have many more ideas and positions in the book, and we probably have the opportunities to discuss more in the next few months. That's all for today. Thank you very much, and see you next month.